Governor, good morning.
Morning.
I think MD just spoke about quantum. We'll go reverse of quantum, okay? Because we have big problem to still not solved in this whole space of financial inclusion. And let me start with Governor. I've been in this space for 10 years, and one of the challenge we still have in this space is the market infrastructure for inclusion. And in your recent quote, you want to shift the financial inclusion dialogue to wealth of households. I guess you're saying the same thing, that we have a challenge in the existing market infrastructure. We want to do inclusion, but the economics are still not right. Why did you say that? Do you see the same thing happening in Thailand?
You should focus more on the well-being of households. And I think an important ingredient of that is as you put it, financial inclusion. So when you think about the objectives of policymakers in our space, in the financial market space, I think there are at least three things that we care about. First is, again, efficiency, which relates to growth. The other one is inclusion / equity. Those two things aren't exactly the same, but they're related. And then third, very importantly, is stability and safety. And so I think when we're thinking about regulating, we need to think carefully about the priorities that we put on each of those objectives. Sometimes they go together, sometimes they don't. It's not always a dilemma, it's not always a trade-off. And I think one of the important things is to realize that there's certain things you can do on the regulatory front that will help alleviate those trade-offs, right? That you don't get that kind of efficiency and inclusion trade-off that you might otherwise do. But you're right, that there are market forces and whatnot that tend to force you in one way or the other. But trying to find that right balance and then thinking about the right approach and the right tools to be able to get the objectives that you want, I think is very important. And those objectives, I think, also change over time. If we think in the case of Thailand, for example, one of the innovations that was very important for us was the improvements we made in the payment space, which we're trying to address these very concrete pain points in the payment space. We had a situation where cash usage was very high. People were still using checks a lot. I think Thailand will be one of the places that I think will use checks, the last places to give up checks. It's like the Japanese and the fax machines, unfortunately. But anyway, the costs were very high. We had, the mobile banking and whatnot in place, but it wasn't really being used because the fees across banks are very, very high. So there were these obvious pain points where the costs are very high. And so, one of the things we had to do when we put in this the system with prompt pay and whatnot was to try to improve the efficiency, get the costs down. But aside from that, there were other things that we had to do to try to get improvements in the inclusion side, to try to get the adoption up. And there are a variety of things, not just from us. Stuff on the government side is very important to try to improve adoption. So, doing the tax stuff, refund, whatnot, through the system, doing the welfare payments out through the system, that all help adoption. But one thing that was very, very important, and again, this is an example where the efficiency and the inclusion sometimes can go together, is on pricing.
I see, indeed.
Yeah, so the fees are very, very high. And then, so one thing that was I think a key kind of game changer in that was to try to get the interchange fees to go to zero. And that brought the fees down, and then the banks then...
Governor, who pays for these expenses? Because putting a payment infrastructure is expensive. Hundreds of $millions goes there. The economics of payment services to zero cost just doesn't work unless state decide to absorb the cost as a national utility. Do you think that's a sustainable practice?
I think the role of the public-private sector and how you divide it is a critical question, and it gets back to that I talked about, those objectives that you want, right? The efficiency, the equity, inclusion, the safety, right? I mean, if you're driving for efficiency, you don't care so much about the inclusion, which I think some countries have done. Then you go the private solution, right? You get the efficiency, you get one, but you don't get the inclusion.
Yes.
And you run into the whole danger of, again, walled gardens and whatnot that arise. But if you get the public sector involved, because you think it has this public good aspect to it, then
but how many countries can afford to spend so much money? And one of the reasons why it is only few countries can count who has put a national infrastructure payment because they could afford to put that infrastructure in place. But many countries still struggle. And I think that there was a hope in Africa through the mobile phone network to get it right. But it has not really scaled.
Short answer is something. I don't think there's a dogmatic answer that this thing should be public or private. I think again it gets back to the objectives that you want.
Yes.
And you think carefully about what's the best way to achieve those objectives, right?
Yes.
In some cases, like in our case, what we ended up doing was we let the private sector to invest in it, mainly the banks, right? That has had some consequences as well.
Absolutely.
In terms of getting the system up and running, it was very, very good. But in terms of getting kind of open access to the infrastructure, that has been an issue because the non-bank access to that payment infrastructure has been the speed bumps along the way. So I don't think there's a easy public private it should be this way. But I do think that there are things again that we as regulators can do, right, to try to get that
balance.
That trade-off better. So, for example, as you mentioned, the economics of the payment infrastructure. What are we talking about? We're talking about something that is, like natural monopoly on steroids, right?
Absolutely.
Marginal costs, go to zero. There are these massive network externalities, right? And there's a valley of information too, right? So, it tends to cause everything to agglomerate, right? So the natural tendency is to have a natural monopoly. And in some cases you could argue that, because of the economies of scale, you want this one person to provide it. But then again, that gives you the walled garden. It doesn't give you the inclusion that you want, right?
Yes.
So what can you do? Okay, well, I think there are a couple of things that in terms of themes or thrusts the regulator should keep top of mind to help get that better balance and that trade-off. One, open infrastructure.
Yes.
Right. So if the infrastructure is there, maybe it makes sense to have just one infrastructure. You don't want to duplicate it because of the economies of scale and whatnot. But make sure it's open so different people can access it.
Yes. Open infrastructure to anybody can participate.
Make it as interoperable as possible. So if you do have different infrastructures, at least make sure that they're able to
allow
communicate.
Competitions, but interoperable.
And third, I think very importantly, this is something we're focusing a lot now, is open data.
Open data.
Because that gives you that more competition, prevents that walled garden stuff from happening. I mean, if you talk, you mentioned the economics of payment, right? And you talk about the public, private, whatnot, and I think in some circles there's a tendency to think of payments as a public good.
Yes.
Right? And then I don't think that's quite right. And secondly, the danger is that it motivates that you can do whatever you want, spend whatever it takes, and not think about it because you say it's a public good.
Yes.
The reason I am skeptical or cautious of that argument is because, and I apologize, I'm going to go full frontal economist nerd on you here, but payments it's not what we economists think of as a pure public good.
Yes.
Right? A public good, you think normally it's non-rival, meaning I use it, you can still use it. It doesn't take away your benefit, and it's non-excludable. Okay. Payments clearly is non-rival, right? Because the more people they get on, the better it is. But it is excludable. So in the jargon of economists, it's more of a club good than a public good. And so there's this natural tendency for you to have these clubs, these big clubs. But again, if you have the clubs, you want the clubs to be, the members to be able to move, right? So that interoperability and stuff to happen. And so, putting in those rules, just a one last one, helps to mitigate that efficiency and inclusion trade-off that we're talking about.
Domestic is a struggle. Cross-border is double struggle because we are doing Nexus together. Your tech, because in Nexus we try to make multiple network interoperable. We try to make the messaging system standardized. Some are arguing that it will add cost to existing cost infrastructure. Do you buy that argument?
It gets back to the whole bilateral and multilateral debate too on cross-border. We did stuff on the domestic front first, and then for us the natural evolution was to think about cross-border because we're a country again that's very dependent on tourism, right? So we started off with a bunch of bilateral linkages, particularly on payments and QR payments with countries for which we had a lot of tourist traffic. Back then, multilateral wasn't really an option because of the
yes. But there's no argument. It has to multilateral.
Now?
No,
it has to be.
No, you don't believe.
I think that again, as with a lot of these things, I think it's important not to be dogmatic. Right?
Okay.
So I will say this: we're obviously involved in Nexus, so we think we're a fan of it. And we think it's definitely the way to go. And obviously, the solution of going only bilateral makes no sense because then you have to have like a.
It's expensive and.
And it's expensive, but at the same time, getting back to it, the bilateral linkages that we did, right? They usually take about a year. Year plus. The multilateral, when you're in right, a lot of people at the table, the whole negotiation stuff, it takes a lot longer because the issues often are not the technical stuff, right? But it's
the policy.
It's the policy stuff, it's the governance issues, it's the different regulations that you have in place and whatnot. So the more people you bring to the table, obviously a lot of times it's harder to get a solution. So all I'm saying, Somnendu, is that on the having a whole bunch of only bilateral stuff is clearly not a solution. Multilateral has to be there. But if you ask me, is only multilateral the only way to go? My answer would be maybe not, because you probably need to supplement that with other stuff.
Yes.
There might be other countries that aren't ready to join the club.
And there could be different mechanism.
Again, tailored, right?
Yes.
And then that makes sense to have bilateral linkages. The other thing that we're doing, and again, our priority will be on the Nexus and the multilateral, but there are going to be countries that we're never going to hook up, right? Because there's no justification.
Also, the economics doesn't work.
Yeah.
Also.
So the other thing we're doing is looking at innovations in our sandbox about like doing tourist wallets.
Sure.
Right. So that regardless of what country you come from, you can have this wallet. You can use the QR codes, use the digital payments infrastructure in Thailand. So it's a question of multilateral will be there, but it needs to be complemented with other stuff.
Well, Governor, I'm going to make a little more fun question here. The new president in the US doesn't like CBDC.
This is a fun question.
Can you clarify? I think he means something else. Central banks around the world are focused on CBDCs. What will happen to all the projects?
Yeah, there was a lot of interest, talk, hype, whatever, right, about CBDC. I think a lot of it was, the hype at least, was focused on the retail CBDC space. And a lot of that hype has not played out because despite all the pilots, and we did them too, we were quite active in the CBD space for quite a while, and we did a retail pilot for which we finished up previously. We haven't seen any.
I think he meant
implementation.
Retail CBDC, not the wholesale.
Yeah. And so I think because again of privacy and whatnot, concerns and whatnot. But I think again, getting back to your point about the focus on his focus on, or actually his, but the people's concerns about CBDC focus more on the retail side. One. But and you also have not seen any kind of real implementation of CBDC, and I think there are good reasons for that, aside from the privacy considerations, and that is that the use case is not entirely clear. If you look, particularly in ASEAN, where I think we've done a terrific job, right, in the fast payment space, we have very good retail payments infrastructure already. The digital payments on the retail works very, very well. So the additional benefit of having retail CBDC is not entirely clear. Put very simply, it's like there's a high bar for you to overcome. And so I think that combination of not having a very clear use case, plus the concerns that people have, like on the privacy and whatnot, have caused, I think, a healthy skepticism about when we're likely, if we're likely to see stuff happen in terms of a full production rollout of retail CBDC. That is different. I know this is probably...
That's what President is talking about.
That is different from wholesale.
Yes.
Wholesale CBDC. I think we at the Bank of Thailand, I think probably other central banks think the same way, that the use case for CBDC are much clearer, and also that the downsides and the risks of wholesale CBDC are also much lower. So again, a much more compelling case for taking wholesale CBDC to production.
Okay.
So for us, for example, one thing that we've been playing around the wholesale CBDC.
Sorry, Governor, just to answer the question also, why central banks have not put production grade wholesale CBDC yet, despite 5 years of experiments?
Partly, again, it's because the stuff that's already there is working reasonably well, right?
Okay.
And so
the wholesale CBDC.
No. For the wholesale CBDC, yeah, both. But again, it gets back to this. It's get back to the use case, right? So one use case which we're looking at, and we see a very clear use case for wholesale CBDC, where there's a very, very clear pain point, is in cross-border transfers, right? With the correspondent banking network. Is very expensive, high settlement risks, right? Takes a long time, and so one project we've been involved in is mBridge, which we've been working with several other central banks, and that involves wholesale BDC, and in that project we've seen that it can reduce the settlement times from days, 3-4 days, to literally minutes. There's no settlement risk, visibility, transparency, very, very clear. So I think the benefits of that are very, very clear. So that's an example, again, I think of a use of wholesale CDC that has a clear use case, and the risks and the downsides are not that high.
So, but I think there is a need to a time has come to put wholesale CBDC to production. I think most central banks are comfortable with the idea. They understand the use case. We just have to get over that.
And there are a lot of innovations, I think, that will be facilitated by having a wholesale CBDC infrastructure in place.
Okay, switching the gear on topics here. Cybersecurity. As we are getting excited on inclusion, digital finance, open data, open network, the reverse is all the cybersecurity issues. How are you dealing with that? We in Singapore are dealing with that. In other markets, they're dealing with that issue. Everywhere there's a concern.
I think, digital finance in Thailand, in other countries in ASEAN, we've made good progress. But I think it's also quite clear that if we don't address safety issues, it could derail the good progress that we've made in the digital finance space. And safety, I don't think it's just the cyber, right? Cyber is just one aspect of it, very important aspect, no doubt. But I think there are issues regarding concentration of the vendors that are used, the service providers that are used. I think the whole AI discussion, I think there's a lot of concentration there. A lot of models out there, but again, they rely on very few models, all of which rely, again, someone remembers saying this, basically on they rely on 3 basic models and only on 1 chipset, right?
Yes.
So it's all this stuff is very concentrated. So there's a concentration risk, there's a cyber risk, and there's another risk which is, I think, very, very important. And in terms of the sensitivity and the chances that it slows down the innovation that we would like to see, is fraud. I think we've made good progress in terms of implementing the fast payments and getting that efficiency side done well. But again, that comes along with these risks, particularly in the...
So are you worried about those risks? Or do you get...
Very, very, very.
And there's no easy way out?
No, I think, the fast payments, I think, has translated, made all the fraud stuff happen, that much faster, and we've seen that it evolves very, very quickly, right? And that for regulators, we've tried to stay nimble, but again, it's, the other side moves all the faster, right? So when, it first came out and there were these, people were sending these links, and people were clicking on the links, and that caused all the problems. So we responded to that, get the banks not to send out the links. But then, it moved on to something else. We upped the security of the mobile banking apps and whatnot, right? And that was, and putting in place things like biometrics and whatnot, and authorization. And that was appropriate for the unauthorized fraud transfers, or the fraud coming from unauthorized transfers. But now, it's the whole different kinds of scams, which are authorized transfers. So a lot of the regulatory response that we put in place for the unauthorized stuff doesn't work as well for the
Do you think there's a case for a ASEAN-wide utility for cybersecurity monitoring?
I think there's a case for even broader than ASEAN, because some of those issues that I talked about, the concentration risk and whatnot, right? That can't be handled at an ASEAN level. That's got to be handled at a global
absolutely.
level. Yeah. So
but at least coming together, sharing information, common utility. I think a strong case.
Oh, absolutely, because it's stuff that we can't do at the country level or even at the regional level. So sharing best practices, certain protocols and whatnot, and then you talked about the cross-border stuff that we're doing, right? So now the fraud is happening domestically. Once you link up all this stuff cross-border, then you got cross-border fraud. So how do you handle the cross-border fraud? You need to put in place a protocol, process for handling that. So all that stuff needs to be done at a higher than country level.
I know we have a couple of minutes left, but before that, I want to get through one fundamental question. We spoke about how at least the ASEAN countries should upgrade themselves to fundamental digital infrastructure, get the digital ID, the payment systems up, data systems, consent architecture, now the green disclosures. We have seen countries doing as a stack, but we have not seen they're getting connected. Digital IDs are not getting connected. Payments have gone to some extent well because it's a natural force to make it work. Data still not connected across market. When do we see this happening? Because we've been talking about it for ages that we have a common ASEAN framework for all this infrastructure. How do we move forward with this?
Slowly and pragmatically, my short answer. How many minutes do we have left? So I can.
I have a 1 minute question for you, but there's 2 minutes left for this.
Okay, for this one. I mean, if you take like the kind of 30,000-foot view of what's like in ASEAN, right? I would say we're doing very well in the domestic payment space. We're doing quite well compared to other places in the cross-border space. On ID, not, okay, but not great, right? Like for example, in Thailand, well, we would like to have a system like you do here, with SingPass and it's all, but ours it's a more federated. So even you're talking about kind of cross-border sharing and stuff. Even domestically, we're having problems. So like walled gardens with ID, we have two different systems of ID. There's national digital ID and there's a government thing called Thai ID. So on ID, I think it's less so. And on data, I think, that's where we need to do a lot more effort. So in Thailand now, I think we've again, done pretty good on the payment side. Like I said, the ID stuff is reasonably okay. There's stuff to work with, but the thing we really need to put a lot of effort on now is on the open data front.
Yes, open data.
And open data, I think on that, in ASEAN, we are still lagging, need to move ahead on that. So that would be my short answer there.
Yes. There's a lot of work to do there. Now, last question perhaps, take your time, think about it. You're going to end your tenure.
Yeah. Before we go there was one thing that you kind of touched. I think we're at FinTech Festival, right?
Yes.
So it's all about innovations and whatnot.
Oh yeah, innovation. Yes.
Yeah.
So please answer the question. How do you?
We went off script a lot, so this is one of the questions that was on the original list. I thought we were going to talk about.
No. So I always question that central bankers struggle with innovation because they're looking for outcomes.
And I think for this audience it's relevant, so that's why I brought it up.
No, thanks for bringing it up. I don't want to criticize central bankers.
60 seconds that are left, but. No, I think you're absolutely right. Innovation is something that central bankers and regulators struggle with because we don't know what the outcome of the innovations are, right? So I think that it puts the burden on us, a certain kind of approach to take, which is a couple of things that I think have guided us and are useful. First, I would say is that sometimes, because we don't know what the outcome is, right? It makes it hard for us to take actions. But sometimes it's easier for us as regulators to specify what the outcome that we don't want is.
Okay.
So thinking about in terms of red lines, right? And guardrails. So I don't know what the outcome is, but you say, this is what I do not want to see.
Okay.
So that kind of perspective, that guardrail perspective, I think is very important.
That's a good point, yeah.
And particularly when regulating new stuff. The other point I would make about regulating new stuff is probably that, we should be wary about regulating things too quickly. You know, this old joke about the hammer, right? You hammer everything looks like a nail. If you regulate everything looks like you want regulated. But I think with new stuff, I think it's important not to regulate too quickly for a couple of reasons. One is, you know, because you don't know exactly what's going to happen, what it is, you might stifle it if you over-regulate it, obviously. But the other side also is that because you don't know what it is, and it might violate some of the red lines that you're concerned about, if you regulate it, then you validate it.
Yes.
And sometimes you don't want to do that either.
Absolutely.
Okay, so that would be my point.
No, I know, but I can let you with that last question. Your term is ending next year.
Yes.
Any fintech plans? We have a GFTN somewhere there.
Short answer, Sopnandu, is I have no plans, no ambitions, fintech or otherwise. I have, you know, a long list of places I want to visit, books I want to read, and so I'll focus on that.
No, you spend 1 year reading books, but there's a GFTN.
Okay.
So if you ever think about doing something...
Also, this is like a job interview now.
No. Please do give a call to us.
Okay.
Thank you very much, Governor.
Thank you.